When you're planning a big home renovation, you've probably got architects and builders lined up. But what if I told you that you might be overlooking your most valuable consultant, a tax expert? Today, we're digging into a fantastic strategy developed by the specialists at My Tax Accountant, and it's all about how smart renovations can unlock thousands of pounds in tax savings you probably never even knew existed. So let's just get right to it with a huge question. Could that dream kitchen extension or that loft conversion you're planning actually save you a five-figure sum in tax? I mean, we're not talking about a few quid here and there. We're talking about a serious amount of money. And the answer, believe it or not, is yes, it absolutely can. So let's walk through the exact strategies from My Tax Accountant that turn your renovation spending into a powerful tool for shrinking your tax bill, both right now and way into the future. Right. Here's our game plan. First, we'll look at saving money on the build itself. Then we'll get into a very clever way to hit the pause button on your council tax bill. After that, we're tackling the big one, how to slash your capital gains tax when you eventually sell. We've also got a bonus tip on earning some tax-free income before we wrap up on how to get advice tailored just for you. Let's get into it. First up, let's talk about saving cash before the cement has even dried. Most people just assume that value-added tax, or VAT, is this fixed cost you can't do anything about. But that's not always true, and this is where our first hack comes in. So here's the key. While most of your building materials and labor will get hit with that standard 20% VAT rate, there's a special category of upgrades that qualifies for a 0% rate. That's right, zero. That's a direct 20% discount on some of the most important parts of your renovation. And we're not talking about obscure niche items here. We're talking about things like solar panels, heat pumps, and even the battery systems that store their energy. EV chargers, proper insulation, and even simple draft stripping all qualify. If you time these upgrades with your main renovation, you can make some really substantial savings. Now, here is a pro tip from the team at My Tax Accountant that you absolutely have to remember. From day one, start two folders, one for repairs and one for capital improvements. Fixing a leaky tap, that's a repair. Installing a whole new bathroom suite, that's a capital improvement. A new extension, a new roof, a loft conversion, those are all improvements. Keeping these invoices separate is going to be vital for a massive saving we'll get to later. Trust me on this one. But wait, there's more. There's another lesser-known VAT relief. A reduced rate of just 5% can apply to certain projects. The most common example is when you're bringing a property that has been officially empty for 2 years or more back into use. So if you're taking on a derelict property to bring it back to life, you could save 15% on VAT across the entire project. It's a huge incentive to tackle those unloved houses. Okay, so we've saved money on the build. Now what about your ongoing household bills? How would you like to legally stop paying council tax for a while? Well, during a major renovation, it's actually possible. It sounds a bit too good to be true, doesn't it? But if your property is undergoing such significant work that it's basically uninhabitable, you can apply to have it taken off the council tax list for the entire time the work is going on. This isn't just a discount, it's a complete pause on payments. And you know what? The process is surprisingly straightforward. It really breaks down into 4 key steps. First, and this is crucial, you have to contact the Valuation Office Agency, the VOA, before you start any work. Second, the work has to be major. We're talking structural alterations, not just a new coat of paint. Think walls coming down or the property being unsafe to live in. The VOA will then have a look, maybe even inspect it, and if they agree, they'll take it off the council tax register. And finally, you just have to let them know when it's ready to live in again. Simple as that. And here's another little council tax gem for you, especially if you're thinking about creating a multi-generational home. If you build or convert part of your home into an annex for a dependent relative, say an elderly parent or a relative with a disability, that annex can be made completely exempt from council tax. That is a huge long-term saving for families caring for their loved ones. Right, stay with me, because this next part might just be the most valuable bit of information you hear all day. This is the big one. We're moving on from saving hundreds or maybe a few £1,000s to potentially saving tens of thousands. This is the long-term payoff for your careful record keeping, and it all comes down to a thing called capital gains tax. So first, what on earth is capital gains tax? Well, CGT is simply the tax you pay on the profit you make when you sell something that's gone up in value. When it comes to property like a second home or a rental, the rates for the 2025/26 tax year are 18% if you're a basic rate taxpayer and a pretty hefty 24% if you're a higher rate taxpayer. On a big property profit, that can be a truly painful bill. So, how do we shrink that bill? The idea is actually much simpler than you think. Imagine your final tax bill is like a big restaurant bill. Now, remember that folder of capital improvement invoices I told you to keep? Well, that's your discount voucher. You get to subtract the entire cost of those improvements from your profit before the tax is even calculated. Let's make this real. Meet Sarah, a freelancer in London. She bought a buy-to-let flat for £450,000 and later sells it for £700,000. Her initial profit, or gain, is £250,000. Now, if she did nothing, her capital gains tax bill at the higher 24% rate would be a staggering $60,000. But Sarah was clever. She spent $80,000 on a big capital improvement, a new extension and kitchen, and she kept every single invoice. So now her taxable gain isn't $250,000, it's $170,000. And her new tax bill? It's just $40,800. Let's just pause on that number, £19,200. That's how much Sarah saved. By simply keeping good records and understanding the rules, she saved nearly 20 grand. That is the power of this strategy. It's not about dodging tax. It's about paying the correct amount by legitimately reducing your taxable gain. Now, it is really important to mention private residence relief. If the property you're renovating and selling is your main home, you typically won't pay any capital gains tax at all. So this strategy is absolutely crucial for second homes, buy-to-let properties, or even if you've lived away from your main home for a long time. And a key rule to remember is that the last 9 months you own a property always qualify for this relief, even if you've already moved out. Okay, so you've done the renovation, you've made all the savings. What's next? Well, that new loft conversion or spare bedroom could now become an income stream for you, and a very tax-efficient one at that. Here's the deal. The government's rent-a-room scheme lets you earn up to £7,500 a year from taking in a lodger, completely tax-free. If you earn less than that, you don't even need to declare it on a tax return. It's honestly one of the most generous and simple tax reliefs out there. Now, there are a few conditions, of course. The room you let out has to be furnished, and it must be within your main home. So this doesn't apply to a separate, self-contained flat with its own front door and kitchen. But for a spare room in your house, it's a fantastic way to generate extra cash with zero tax to pay on it. So, we've covered saving on VAT, pausing your council tax, slashing your capital gains tax bill, and even earning tax-free income. These are incredibly powerful strategies. But tax is personal. Everyone's situation is unique, which means your tax plan should be too. And that brings us to a very important point. The information we've gone through today is for general guidance. Tax law is complicated and it can change. So before you make any big financial decisions based on this, it is absolutely essential that you speak to a qualified, professional tax advisor. To get that personalized blueprint and make sure you squeeze every last drop of savings out of your project, you can speak directly with the experts who came up with these strategies. Get in touch with the team at My Tax Accountant. Their phone number is 020-8570-8531, and their email is info@mytaxaccountant.co.uk. They can guide you through all of this and make sure you're saving as much as possible, all legally and effectively. So, before you sign off on that final renovation blueprint, just ask yourself, is a tax advisor on my project team? It might just be the most valuable decision you make. For more brilliant insights like these, make sure you subscribe to the My Tax Accountant YouTube channel. Thanks for watching.